Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight the markets were very whipsawed right across the board as the dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded from 100.29 to a high of 101.59 to settle at 101.50. From the strong advance in the greenback, the Australian dollar got into a little bit of a spot after taking the challenge towards 68.45 was rejected and now pressures the key level, which is seen at 66.90 or the 60-day moving average. Due to the rejection and also the fact that we are pressuring the downside, a break of this level would reinstate a potential target of around 65.5. So keep an eye on this level today. However, in light of the pattern though, the market has broken down technically, so I feel there will be pressure on the downside. There is a possible chance that we may see this level break at 66.90 to reveal the next target of 65.5. A very big candle for euro after taking the challenge towards the top side level of 111.60.70, and from there it's posted an engulfing candle and now plummets all the way back and reaches its objective, which was 109.80. Looking at the current pattern, it's still quite heavy and therefore could see further risk to the downside and look towards this region that I'm highlighted at 107.75 and reassess. In light of the pattern and the dollar strength, the market found a little bit of negativity when it comes to dollar yen. The challenge to the walls at top side level around 141 didn't quite like or sustain there and now plummets back towards the short-term base, which is around or close to 137.50. I feel the market though overall has potential to regain itself after the 4 days of negativity and therefore could see a rebound back towards that top side range around 141 to about 142. And also the pound posted a very big candle and an outside range day after taking the top side challenge, got into a bit of spot there towards that 130 area and now back towards the downside and looking at this key trend, which is seen roughly around, if we just highlight the value, at 127.15. I feel the market though has potential to rebound off this level, so I'm not going to get as negative for the pound, unlike the Australian dollar and the euro, and therefore could see a recovery. But this engulfing candle and the technicals weighing a little bit heavy will put pressure on this level, which is only about 90 points away, and see if it can sustain. Having taken the topside challenge, gold found supply from this key area, which is around 1,900. As you can see here, we've maintained all the way through this level, going back to as far as March, and the rejection and the engulfing candle reaffirms the downside, which I was calling at 1,946, which is where we are now, and now maybe even lower down towards 1,915 to 30. So let's see if the market does continue on or follow through from its topside rejection. Wrapping up with oil, the market is not back down, and as the bearish divergence slowly dwindles away, could now see the market rise up towards the region of $81, or at least to 80 and then 81 as a potential target. But as you can see, this support line, which is now resistance, is still containing the bull run, and therefore towards 81.60 may again find some good supply returning. So it's about 150 points away at least, so the market still has a bit more room to gain. Well, that's a wrap for the week. Thank you very much for joining me, and as always, look out for the intraday report, and also I hope you enjoy this great start to the new weekend.